Afternoon, everybody. Good afternoon, everybody. I am super excited for this tax season. There are lots of changes coming up, and I'm so glad all of you could join us for this webinar to discuss them and go through them. We have new tax prep team members. We have a new tax organization software. You can get the slides today by clicking the QR code on this slide here. They will also be at the end, and we will also drop a link to the slides in the chat in case you were looking for those. Lots of good changes, including tax law changes that we will get to later. Reminder that tax services are provided to the clients of Milestone Financial Planning only and their families by Jennifer L Climo CPA PC. It is, we have it as a separate tax business for state rule chain laws. The same team that works on your planning will be preparing your taxes. Milestone times JLC CPA equals one-stop shopping for our clients. So we're very excited to be able to offer this to all clients. Disclosure, as usual, nothing you hear today should be considered tax, financial, or investment advice. And don't make investment or financial or tax decisions based on a webinar. Please talk to somebody about your personal circumstances. Any questions you have today, you can send them to our new tax associate, Janet Lucier, at janet@milestonefinancialplanning.com. Contents today, we're going to talk about all of these things, the tax team, the tax organization software, and some other interesting changes, and also get to our tax prep pricing at the end. But the purpose of the seminar is to prepare you guys, our tax prep clients, for the upcoming tax season. We like to improve our process every single year, and we think we have really done that. We have found this what seems to be a fantastic software, a very easy to use software called Stanford Tax that John will be demoing shortly. This integrates with our tax preparation software and pulls over your tax organizer in a smooth and easy to use way with a great user interface. We'll ask you some questions. It will prompt you through to upload documents based on your answers to the questions. And it also will prompt you to upload documents that you had last year. For new clients, we will also be entering your information in the software as well. And links to the software we'll be sending out probably next week to everybody. Well, hopefully, we would like to get to them by Friday, but more realistically, it'll probably be Monday. Any questions you guys have today, you can drop any questions in the Q&A box in Zoom. Your tax team is different this year. We have a new tax associate, Janet Lucier, who I mentioned, who will be running all of the administration of tax season. Everyone who is a tax prep client will be hearing from Janet. Most of you already received your tax engagement letters via DocuSign. Probably 85% of those have already gone out, and the rest are going out in the next couple of days. Trust engagement letters have not yet gone out yet. They will go out by the end of this week, and all of those are going by DocuSign. Janet has been sending those. Janet comes to us from a regional CPA firm where she worked for over 20 years until the firm owners retired. And so we are very lucky and blessed to have Janet on our team to help with our tax season. Everybody, as I mentioned, will be hearing from Janet at some point this year. Different this year also is I will not be the only one issuing tax returns. Our own Evan Marquis, CFP, has earned his enrolled agent designation this year. And many of you know Evan, especially if you work with John or Steve. And Evan and I will both be signing tax returns this year. We are very lucky to have Evan on our team as well. As you know, I have over 30 years of tax prep experience, and even though Evan has only been with us for 2.5 years, and he has 4 years of tax prep experience, he has proved himself invaluable at tax preparation and planning, as any of you who have worked with him will know. The rest of our tax prep team is made up by Garrett, Dan, Cameron, Catherine, and Janet, who will be assisting with tax preparation. They will be preparing the returns for Evan and I to review. And so they will be reaching out. or all of these folks should be reaching out to you with questions. The bottom line is the people that work on your planning team will be preparing your tax return. That should allow for a much smoother process. Many of these people will know the answers. They will be intimately familiar with your tax situation, which should help smooth things out. Now I'm going to pass it over to John, who is going to show you our.
Jen, just go down to the next slide real quick before you
Sure.
stop sharing, and I'll pick up the
Perfect.
Stanford tax. So as Jen mentioned, we're transitioning to a new organizer document management system for tax season. If you've been with us for a long time, you know that we used to have the paper form or PDF that we would send to you, and you either print it off and fill out all the fields there and send it back to us. Last year, we transitioned to a better questionnaire that we built ourselves. It still required you to fill out the information and then upload documents to a different portal. Now we've sort of integrated that into a new system called Stanford Tax that works with our tax prep software. So it's going to be a much smoother process for everyone. And again, as Jen mentioned, that will be the email to help to get you logged into that will go out within the next week. And once you get that, then it's document data collection time, you giving us all the information that we need to then be able to prepare the tax return for you. All right, so Jen, if you stop sharing, I'm going to bring up what the software looks like. So how it's going to work is you're going to get an email from Stanford Tax. Is that up there, Jen? Can you see that?
Looking good.
Okay. So you're going to get an email from Stanford Tax that will explain, hey, this is the new software that we're using. It's kind of an introduction email. You'll click on a link. Hang on to that email because it's the way that you're going to access the questionnaire if you go in and out of it. There's not a username and password like traditional online portals. It's just you using that link. So you'll click on that link. It will ask you what your social security, the last four of your social security number are. That's sort of the password. You click on that, and then it's going to bring you to this home page here. So this is from myself. It's a made up questionnaire. There's two components of the home screen. You have the questionnaire piece of it, and then there's the upload document piece of it. The fields, the documents that are listed in this list here, those are going to be based off of the income types that you had in the past. And if you need to add anything else, like for instance, if you had a property tax statement and this wasn't listed here, you could simply just drag and drop it into this field here, and then it will show up down at the bottom here. The key part of this is the questionnaire. So to get into the questionnaire part of it, you just click on enter questionnaire, and there's four components: basic info, income, deductions, and then there's a bunch of questions at the end, which I'll show you. When you're in the questionnaire, if at any time you want to look at what documents you've already attached or uploaded, you just click on this. Yeah, it says 3 attachments. Click on that, and it will bring you to the list of everything that you've previously uploaded. Now, another cool thing about this software is that if we put documents in there, like we're going to upload all your Fidelity 1099s, those will already show up in your list. And any changes that you make or that we make on our end, those will instantaneously appear for whoever is in the software. If you're married and you and your spouse are working on this at the same time, it's the same thing. Any changes they make will automatically show up instantaneously. So it's a really nice feature of this. So
John,
essentially,
John, I just
yes.
want to point out that if you have already uploaded, very few people have uploaded a few documents to us already. We are adding all of those to your Stanford Tax portal for you. So you don't need to re-upload anything you have sent us. They will automatically appear in here.
All right, thank you for pointing that out, Jen. So I'm not gonna. There's 30 different screens here. I'm not gonna go through every single one of them, but the format layout of the tax organizer here is pretty similar to how the paper version was that you're used to. It's just you're going through it, and it will, based on the how you answer the questions, it will prompt you for additional information. But the first part of it, basic info, you're just putting in your name, your address, so did you move in 2025, et cetera, filing status, spouse's information, dependents. Then for income, you're going to come over here and it has a list of, again, what you had in the past. Like if you had a W-2, it's going to prompt, this will already be highlighted. But if you have additional types of income that you're adding to the upload, all you have to do is click on the box and it will be highlighted. That will, if you have a particular income type highlighted, it's going to prompt additional questions to ask you as you move through the questionnaire. And it will go through each income item individually. And deductions, the same thing. You go through the list, answer or click on what deductions that apply to you and your family. And then again, you click on next, and it's going to bring you through other questions that are prompted by what you selected. The end of it, it's just asking you questions that are related to things like estimated tax payments. For this year, there's a lot of different tax considerations that Jen is going to go over that are related to the OBBB, like tip income and auto interest deduction, overtime income. Those questions are added here. How you want your refund, different questions about whether or not you made gifts, if you have a IRS ID PIN, and finally, questions about the Trump accounts, which Jen is also going to cover at the end. Once you've gone through the questionnaire, you'll have one final opportunity to put in anything you want the tax preparers to know, and then you're done with the questionnaire. You just hit save and close. And if you've uploaded all of your documents, finish the questionnaire, then you're going to hit start preparing my return in the bottom right hand part of the screen. And then it will ask you why you didn't upload a document if we're expecting it. In this case, I haven't uploaded, all the documents I should have for this mock client, or person. So I could go through on here and put I close this account, et cetera. And then if there's a reason for all these, you hit submit, and then we'll be notified that all the information is in and it's time to file the return. So again, really great questionnaires, new system. We're very excited to roll it out. And I think that everybody will appreciate the improvement here. Any questions, you can reach out to Janet and she'll be happy to walk you through any issues you have with Stanford Tax. That's all I have. Jen, we'll go back to the presentation and start talking about changes for 2025.
Great. Let me just share again. John, you got our slide showing?
You're back. Yep.
Great. 2025 tax changes. It was a big year this year. I'm not going to spend a real lot of time on these slides. just want to talk about a few things on what you need to upload if these things apply to you. John and I covered the 2025 tax changes from the OBBB Act in detail last summer, and that video is available on our website under Insights Videos. Okay. First item to note is the standard deduction is going to be different this year. It's either going to be what it was last year, more or less, or it's going to be a lot bigger if you have lower income and you're over 65, or it's you're going to be able to itemize this year. The big lesson here is don't assume you can't itemize this year because you haven't been able to itemize in past years, because they increased the amount of state and local taxes that some people can deduct. There's lots of different phase outs and rules for all of these things, but it's better if you just submit the information to your tax preparer and let them figure out whether or not that you can itemize. So if you're over the age of 65 and your income is about 250,000 or less, then you will have a larger standard deduction on the right-hand slide. But if your income is expected to be over 250, then you're in the left-hand slide, pretty much. Which means if you're married filing joint, you'll at least be able to, your standard deduction will be $31,500, which is still a large amount of deductions to have to get over to be able to itemize. Itemizing your deductions means when you total up your mortgage interest, your real estate taxes, your state income taxes paid, your charity, and your medical expenses that exceed 7.5% of your income, you add all those things together, and it would have to be more than $31,500 if you're married to be able to itemize. A lot of people still can't do that, but with the state and local taxes, some people will be able to do that this year, especially if you live in one of these states. Massachusetts, California, Maryland, Pennsylvania, Vermont, North Carolina, New York. There are others, obviously, but these are the bulk of our clients that pay state taxes, live in these states. And those state income taxes on top of high real estate taxes can pretty quickly get you up above that $31,000 threshold for married filing joint. And of course, the limits are even less if you're single. However, if your income exceeds $500,000, then this extra deduction for the state income taxes is reduced and starts to go away and is gone if you make over $600,000. And oddly, that limit is the same for single versus married filing joint. And this is one of the only times I can think of that they put the same phase out limit for those two filing statuses together. But that is good news if your income is under 500,000 because you might be able to itemize this year. So again, if you expect your expenses, your itemized deductions to exceed 31,000 if you're married, then you want to submit this information to your tax preparer and let them figure out whether or not you can itemize. If you are going to itemize your expenses, you need to track and submit your medical expenses. That is anything not paid from an HSA. If you're paid it out of your HSA, then you can't also deduct it. There is no double dipping. It includes your mortgage interest, but just as a reminder, if your loan balance is over $750,000, you will not be able to deduct all of the mortgage interest on that loan, but we will make that calculation. You just submit us the 1098 from your mortgage company. Charity, that's a big one, both non-cash donations. If you have a receipt from giving away clothing during the year, you want to submit that, plus all of your statements from your charities for gifts that are over $250 per year. They have to send you a statement saying that they didn't get anything in return for that, and then we can deduct those amounts. Real estate taxes, state income taxes, excise taxes. Again, these are only necessary to submit if you're going to itemize your deductions. And again, if that's married filing joint over 31,500 and expenses, single is roughly half that. And interest on RV loans. If you have an RV, a lot of clients bought RVs in the past few years. If you did take out interest on those and your RV has a bathroom, you oftentimes can deduct that interest. Okay.
Jen,
yes.
Where do you think you'd mentioned the states that have income tax? Do you think that's where the taxpayers will be who will move from taking the standard to the itemizing? Okay.
I do. I haven't seen it too much with anyone in New Hampshire. because they don't pay the state taxes, even though they pay high real estate taxes. It just isn't enough to get them over the hump. But I have seen it with people living in some of those other states that do pay taxes, and we have a lot of clients there.
Okay.
But good question. Okay, you might have heard a lot about the no tax on tips rule, which is going to apply to a lot of folks, not and a lot of folks on this call, but it might apply to your kids. And we do a lot of children's tax returns, kids in college or working children. In order to factor this in, and if it does apply to you, we will need to see a pay stub that breaks out the amount of tips. And this also goes for the no tax on overtime up to a certain limit. We will need to see the amount of overtime on your pay stub. And it's a bit complicated if you work for a union, because the no tax on overtime only applies to overtime as defined by a certain law, not by all laws. But I don't know that that's going to apply to anyone on this call. So if it does, you can send us a note. We will tell you what we need, but basically somehow we need to know how much you were paid in overtime or tips in order to make this deduction. Okay, here's the overtime one. As we talked about, again, your final pay stub would break out what's overtime, what's tips. New car loan interest. I don't know that this is going to apply to too many people on this call either, but if you did buy a new car in 2025 and you took a loan for it, then you should get a tax statement at the end of this year, or if anything else, it will be on your, I think the IRS came out with guidance and said you can use your December statement, or maybe it's your January statement, that will show you the total amount of interest expense you paid during the year. You submit that document to us and we will see whether or not that is deductible. Again, it's only available for new car purchases in 2025, and the car has to have been made or assembled in the United States. So there's a whole website we have to go to figure out if your car is eligible. So in general, we will also need your VIN number, which will be on your new car paperwork. That long paperwork you get whenever you buy a car should have your VIN, or you can just take a snapshot of it and upload it to us. Again, that deduction is capped at $10,000 per year, but I don't know too many people will hit that.
Hey, Jen, I just wanted to remind everyone that, as you mentioned several times, Jen, there are modified adjusted gross income phase outs on a lot of these deductions, and it would make sense for you to look at those prior to uploading information if it's going to be a waste of your time trying to collect
That's correct.
tip stuff. And we have the download link for these slides in the webinar chat, so you can download this and have those handy, because you just don't want to have you going into too much trouble if it's not going to be beneficial for you from a tax perspective.
That's really an excellent point. A lot of these phase out at pretty early income levels, and a lot of our clients, because they're doing Roth conversions to take advantage of lower tax brackets now, might not qualify for these. Good point, John. Not only are this information in these slides, but our OBBB webinar has a lot more information on all of the tax changes and all of the phase outs. Other reminders, these are the same deductions we have and credits that we have available every year, but I just want to remind people what documents they need to upload. Just going on past years' information we've had to follow up with folks about, include if you have childcare expenses, we need the daycare costs broken out by child, by facility. Unfortunately, we will also need the tax ID number and name of any facility that was used for childcare, and that is a credit that does not phase out. So please, if you have that applies to you, upload it. Clean energy home credits, that expires at the end of last year. So this could potentially have applied to you. If you bought a new electric car before September 30th, please upload the purchase documents that will help us qualify for the credit. Your dealer should have given you some paperwork on that. And also, if you installed solar and it would have a certificate of completion that it was installed in 2025, we will need that as well in order to take the solar tax credit, as well as the invoice documenting the costs. And this is the last year, sadly, that we will have these on your tax return, because those are gone after the end of last year. Alternative minimum tax might be rearing its ugly head again. This is a additional tax that shows up on your tax return. And we haven't seen it for years, since 2017, I believe, just because the limits were raised. So most people this did not apply to them. However, this year during tax planning, it looks like we're seeing this again, especially when it comes to people with incentive stock options. So if you have incentive stock options, your advisor has been working with you most likely during the year to calculate in your tax planning and has been factoring in the AMT in your tax planning. But if you have any questions on this, you can certainly ask your advisor. And there's nothing special you need to give us necessarily other than whatever tax forms comes in. It's just an additional tax that you may see on your tax return that you haven't seen in a while. HSAs, just a reminder that there are usually the HSAs these days make you log in to download the tax forms. So there's a tax form if you make a contribution to an HSA, and then there's a different tax form if you take a distribution from the HSA. And you should be able to log into your HSA and download those tax forms. I have seen that a lot of providers are not mailing those out, especially if you've signed up for electronic statement delivery. So it might be something you have to just go get on your own, but the tax form numbers are here, the 1099 SA or 5498 SA. And also it's helpful if you know, hey, I just maxed out my HSA, here's how much I contributed, you can just let us know that, just so we can match that up to all the records. And if we do not manage, we manage most of our clients' HSA accounts, but if we don't manage yours, we will also need the December statement to your HSA to make sure that everything lines up. There's some information that is not on the tax forms that we need for tax filing purposes. But if we manage your HSA, we're able to download that ourselves, which goes back to what John was saying earlier, that you do not have to upload any of your fidelity statements or any statements for any accounts that we manage for you. We can download those on your behalf. IP PIN is a new anti-fraud measure that the IRS came out with a few years ago. We've seen a lot of clients getting their IP PINs this year. It's an extra password for filing your tax return. A tax preparer such as ourselves cannot e-file your tax return without an IP PIN. And that IP PIN changes every year. You will get a new letter from the IRS every single year. You can log into your IRS account online to download this. They do typically mail them out to you. If you are married, both you and your spouse will have a separate IP PIN, and we will need that uploaded to Stanford Tax, please.
And Jen, that's not only if you were the victim of identity theft. Anyone can get an IP PIN now to protect themselves from identity theft proactively.
That is absolutely true, and everybody should get themselves an IP PIN. We have seen a lot more, and it's identity theft limited to your taxes. We have seen, and I typically see this with people that file extensions. The bad guys go in and somehow they have access to your social security number and they file a tax return on your behalf to get a large refund, but they can't do that if you've got an IP PIN. We did put out a cybersecurity we did a whole webinar on cybersecurity, and then we also put out a blog that same week, which will be on our website under Insights, where you can read about IP PINs and how to get one and how to set up your IRS account online. Well, we are a strong proponent of getting these.
And just maybe to summarize how you would do that, you go to the irs.gov website and you have to create a profile, right? If you don't already have one.
That's correct. And that's in our, I believe it's in our blog, but yes, you go to the IRS website at irs.gov. You have to verify your identity. It does, I think, require.
It's id.me or login.gov.
Yeah, id.me, and you have to put your license or something. I don't remember. When I had to do it, I had to do facial recognition too, which I think they jettisoned that requirement. I don't know. But somehow they prove that you're you, and then they allow you to apply for the IP PIN. It is pretty painless, and it's super helpful to have an IRS account. Many of you will know that we send out Form 2848 to all of our tax clients so that we can communicate with the IRS directly in case there's a problem with your tax return. We can, instead of doing those the old paper way, we can do it right through your tax account if you had one. There's a way we can submit a request and you can approve it, and it's instantaneous. But I don't know that a lot of people right now don't have these tax accounts, but some people do.
Thank you.
Moving on to Trump accounts. While you can't fund a Trump account this year yet, because the funding mechanism has not been set up, you must elect to do so on your 2025 tax return. If you have a new dependent that was born in 2025 and you want to take advantage of the $1,000 government contribution to said account. Like I said, the deposit can't be made yet, but if you make the election on your 2025 tax return. So with anyone with a 2025 baby, if you want to do so, it will ask you on your tax organizer if you want to contribute to one of these accounts.
Is that a must? You must do that in order
If you
to
want
get
to
into
contribute,
it?
yes. In order to take advantage of this, you must elect it on your return this year. So I don't have too many people interested in this, but in case you are, just let me know or let us know.
Well, you had to have had a baby in 25, right? There's not
Well,
many people that had kids in,
yes. I
of our
think
clients.
others can also contribute. I think you can contribute to other people's. So people do have grandchildren, but we'll see. But this is for the free
That's
to
for
establish the
the
account and to get the
parents would
free,
have to do that.
the $1,000. Correctamundo. It's a pretty small pool of people. Okay, income reporting, just reminding everybody that all of your income received is taxable. If you didn't get a 1099, it's still taxable. So for everybody with businesses, you might rely on your 1099s for your income, but you should really rely on your books and records for what your income was and submit that. This is for people that have income in other ways that don't come through a W-2 or 1099, such as self-employed folks. All income you received in 25 must be reported. We're going to talk about fees in a second, but as some of you, I think there are some people on this call where we do not prepare your return yet. If you are interested in us preparing your tax return for 2025, you can just please contact your advisor and they will make sure you get set up with a tax engagement letter. Everybody else, like I said, should have, most people received their tax engagement letters already. There are a few stragglers going out in the next couple of days, and then the trust engagement letters should go out by the end of the week. And as a reminder, all the engagement letters, you're using the Milestone's DocuSign account, but the engagement letter itself is on the letterhead for Jennifer L Climo CPA PC. Technically, Milestone does not prepare tax returns. Jennifer L Climo CPA PC prepares the tax returns, but it is the same people. Your planning team is preparing your return if you use us. Everyone wants to know what the pricing is. This is the new tax pricing for the current year, which is the base fee, which is $705 for a tax return, unless it's a real simple return. I'll call the real simple ones. They're usually children's returns if for a college kid who's got 1 or 2 W-2s. So a simple child's return is about $350 for the filing. And if there's an additional state, which unfortunately a lot of kids' returns are multi-state returns, that's an additional $300 per state. And rental property and K1 income activity will increase the pricing, as well as will businesses, small businesses, Schedule Cs. There's different levels of pricing for rental properties, Schedule Cs, and K1s, depending on how complex the situation is. We've had people say, hey, I got one 1099, but I have no expenses against that. Okay, great. We just throw one number on there, that's $100. But anything more complicated than that is going to be $300 to $500 per Schedule C or K1 or rental property.
Hey, Jen, how can people help themselves with regards to Schedule Cs and Schedule Es? Make it easier on both parties for preparing that piece of the return.
I will say that most clients are really good at this. They have a spreadsheet, or even writing it down and say, hey, my income was this expense was that, but categorizing the expenses by category. You don't want us having to deal with receipts, or then we get into hourly engagements, which neither of us wants to do because that gets really expensive really quick. But as long as you give us how much you spent by category, then we can work with that. We also need mileage information for both rental properties and if you have a small business, how many miles did you drive last year total for your car? What is the make and model of your car? And how many miles did you drive for business? That's a big one. And then some people have business use of home. And for that, we need extra deductions, such as how much did you spend on your utilities, real estate taxes, which we'll have already most likely, and other expenses, repairs and maintenance and whatnot. But that should all be in Stanford Tax, and you should be prompted. You should be asked about all of that. And if not, your tax preparer will reach out with additional information. But we do love our Excel spreadsheets, and you can upload Excel to Stanford Tax, Word documents, PDFs. You should be able to upload pretty much anything. And the best part about Stanford Tax is if you have one of those extra forms, or you don't even know what the form is, whatever you upload, the document you upload, Stanford Tax will rename it nicely so we know what it is, and it will put it in the right place. It should know that it's a 1099 or a 1099 int for whatever the name of the bank is. So that's the idea. It's pretty slick stuff.
And I know that in last year, people complained about the fact that once they uploaded documents, they couldn't see it anymore, or even know what they uploaded. So that it's a big change this year. Everything will be listed like I showed you in the attachments field there.
That's absolutely true. That's one of the biggest benefits of Stanford Tax is when you go back in, you can see everything right there at any time. And there is a email verification process that it goes through to make sure it's you. So you have to have access to your personal email, the same email that we used for your tax DocuSigns last year, in order to access the system. We don't see too much foreign bank accounts anymore, but if you have any foreign assets or bank accounts in other countries, that is going to be a question that you'll have to answer yes or no to. And if so, if we have to file any foreign tax forms, that's going to be extra as well. And amended returns, we do a lot of amended returns. Obviously, if we make the mistake, we're going to correct that at no charge. If there's an amended return for some other reason, we charge $550 for that. And trust returns are $1,015 this year. And if there's required to state, that would be an extra $300. I am sure we have a lot of questions in the Q&A. John?
We don't have that many. We had one about whether or not you can get in and out of Stanford Tax and whether or not be saved. The answer to that is yes. You can go in and out as many times as you want. You can be in it simultaneously with your spouse. You could be in it simultaneously with someone on the Milestone team. So from that perspective, it's much better. Another question was, if we've uploaded files to the old system for 2025 tax season, are they automatically transferred over?
Yes. They were not automatically, but we are transferred. We're going to take anything that was uploaded already. We've already uploaded most of it to Stanford Tax, unless it was uploaded in the past few days.
Okay. Another question. Schedule C says $100 if only 1 to 2 numbers. Can you clarify what that means?
Again, if it's just one 1099, two 1099s, adding them up, that's it, then you're looking at $100. I hate to say it's fuzzy, but it's fuzzy. It depends on the amount of work. So if it's, you've got the Schedule C with multiple expenses, especially if it's got depreciation or anything complex, then you're looking at $500. But we wanted to do something. Some people just get a 1099. We have to file a Schedule C, but there's really not a lot of activity. So it's fuzzy, unfortunately.
Okay. And Jen, as far as timing is considered, so we said we're going to send out the questionnaire next week. So that's end of January, early February. Tax season ends April 15th. Where's sort of the timeline as far as when people should be submitting their documents and completing the
That is an
questionnaire?
excellent question, John. Everybody should submit their documents as they have them, or as soon as they have most of their stuff together. We prepare taxes first come, first serve. That means whoever had most of their stuff in first gets worked on first. So if you wait until late March to submit all of your documents because you're waiting on one document, then you're going to be at the end of the queue. So I would strongly suggest you don't do that. Submit your documents as soon as you can so you can get into the queue. Typically, the wait is 2 to 3 weeks from when you submit your documents to when you get your tax return back. That assumes all the forms are ready. The majority, not all, but the majority of clients have taxable accounts at Fidelity, and those taxable or trust accounts have revised 1099s, which do not come out until March 6th. So I would say the majority of tax returns in this office do not get issued until after March 6th. So if your return has all of its components complete and submitted to us before early March, we're trying to get all of those out the door. So the earlier you submit, the better, because once you're stuck in that March 6th queue, all of those we have over 100 returns that are done, basically waiting on this 1099. We do process them oldest to newest as soon as possible. But anything coming in new on March 4th, 5th, and 6th is going to wait until all those are out before we're able to start working on those. And that's when the wait gets to be more around the 3-week time frame. But
you don't want people just submitting half completed questionnaires just to get at the front of the line, right?
No, but if you're only waiting on one thing, you should submit. If you're waiting on a K1 that doesn't come in until April 15th, because I know there's a few who do, submit everything else and just say, start preparing my return. Don't just hold out for that one missing document, because you can get that document to us later.
Okay.
I just want to point out that we did not, the only extensions that we file typically are because the client is waiting on a document or the client did not get us the documents in time. You need to submit your documents to us by March 31st in order to have your return prepared by April 15th. But last year we had very few extensions. And again, only because we were waiting on K1s that we didn't have by April 15th. So we're not procrastinators here at Milestone and JLC. We get the stuff out the door. That's one of the advantages to using us.
And Jen, any follow-up questions that you have or the team has after the documents are submitted, that will be communicated via email by someone on the tax team, not at Stanford Tax. Is that correct?
I believe that is correct, that they will be sending you emails just as they have in the past for any missing information or questions or clarifications. And you can also email your tax team, which should be the same as your planning team. The advisors, other than the only advisors that prepare taxes are Dan, me, and Evan. But the planning associates are all preparing taxes this year. So the planning associate that services your accounts, you can reach out to them with any questions on your tax return.
Okay. Another question we had, I gather you are confident about the safety of information, especially the social security number. I believe this is in reference to the Stanford Tax program.
Sure. So let's talk about that. So Stanford Tax verifies your email. You can't get in until you verify your email. And as I mentioned, that is tied to the email used in the tax return from last year. And then you have to actually verify your email. So they'll send you a code and you click the code and link. And then you also have to enter the last 4 digits of your social security number. So it's all linked. So they do subscribe to, we have the security white paper as we do for all software that we use. It is Stanford Tax has been used in the tax prep industry for a number of years now. So the answer is yes, we're confident in the security. Like anything, if your email gets hacked, you should let us know right away and we can shut down your Stanford Tax account. Although someone would still have to know your social security number to be able to get in.
All right, next question. Do you have clients that are tax prep only in terms like Milestones / JLC CPA?
If typically we don't prepare taxes for the general public. We do prepare some tax-only clients, but they have to be related in some fashion to clients. So as a good example is clients of ours who have adult children that need tax prep. We work on college kids. We do a lot of college kids returns as an example. So yes, the answer is yes, but we cannot offer tax prep to the general public.
Okay.
We don't have capacity.
The next one is, I'll take it. It's in getting an ID PIN. massive login using ID.me. I thought login.gov is used for all federal business. Do I need
Yep.
both?
Yep.
Yeah, each government entity, for whatever reason, has been given the option of choosing one or the other. Login.gov is used by other entities, like the Social Security Administration. The IRS uses ID.me for whatever reason. So yes, you do need to get to use both, but they're way better than the old system of having a username and password for every single government agency. And it's once you're in, it's a great website, like Jen said. It not only has the IP pin, which I just checked while we're all here. I logged in. They do have the 2026 IP pins already out. So if you have one of those, you can usually log in and get it. But they also track estimated tax payments on here as well, which is fantastic. So and as Jen said, you can give her authorization instead of having to do a 2840 form. You can just do it. Takes 2 seconds as opposed to the paper form or DocuSign form, which is more steps on both sides.
That is true.
All right, Jen, I think that is it for questions. Finishing up a little early. I know
I like that.
people saw 1:30 and were freaking out that this was going to go for an hour and a half, but we built a little cushion in there for questions, and we didn't get too deep into the weeds on the different aspects of all the parts of the tax code that have changed in the last year. But as Jen said, you can go back to the what OBBB webinar from this past summer and watch that. So if we have no more questions, that's it. Appreciate everyone joining. Had a good group and looking forward to 2025 tax season.
Can't wait. Thank you, everyone.
All right, thanks, Jen.